So I'm Larissa Finley. I'm the VP of Education for the Greater St. Louis MGMA, and I'm very pleased that Tammy Krebel has joined us for today's webinar as a presenter. The topic is Healthcare's Next Normal and COVID Accelerating Change in Healthcare. So a little bit about Tammy. She is the manager of the Specialty Division of Commerce Bank, St. Louis, and holds responsibility of business development within the St. Louis metropolitan market with a specialization in government, nonprofit, and healthcare industries. She has over 35 years of experience in commercial services with an emphasis during the last 33 years in commercial banking. And she spent the last 25 years at Commerce Bank. So Tammy has her Master's of Business Administration from Washington University, and she is currently on the past chairman of the Deaconess Foundation, retired from the board of directors of Eden Theological Seminary, Boys and Girls Town of Missouri, the executive leadership committee of the American Heart Association's Code Red for Women Luncheon, operations and development committee of the Great Circle, the finance committee of Haven of Grace, and the Trust Fund Distribution Committee of Girl Scouts of Eastern Missouri. Currently, she serves as board of Lighthouse for the Blind and Deaconess Foundation, and she has been a member of HMFA and MGMA for over 10 years. She's registered as a municipal securities representative and government securities representative with the Board of Governors of the Federal Reserve System. So Tammy, you are very busy and you have a lot of experience. So I'm sure everyone is really looking forward to your insights into today's presentation. So I just wanted to let everyone know that Tammy is open to questions throughout the presentation, and I will be monitoring the chat. So if you put your question in the chat, then I will be asking Tammy. Otherwise, I'm going to be muted during the presentation. So with that, I will hand it over to you, Tammy, for today's presentation. Thank you.
Thank you, Larissa. I appreciate that introduction. Can you hear me okay? Hopefully so.
I can hear you loud and clear. If we just want to put everyone in the chat to make sure that they can hear too, then we'll be off to the running. Okay, we've got a yes. I think you can go ahead and start.
Fantastic. And I just want to look back with fond memories to the day that some of us had lunch together at Orlando's back in March. I think that might have been one of the last group lunches that I attended before we all got sent home to work remotely. So fond memories of that. Well, I thank you for the opportunity here today to talk a little bit about healthcare and COVID and healthcare transformation. And again, if we were sitting together in person, I'd do this, as a show of hands of, who really led digital transformation in your organization. And if you're like most, it wasn't the CEO or the CIO, it was COVID forcing everybody to make some pretty major changes. Three of the ones that we're going to talk about today is the work from home and the dispersed workforce, as well as new models of delivery, and then the financial implications of COVID-19. And again, most of you in MGMA know this, far better than I do. But the challenges are real. When we look at, we take our time back to March and think about how, folks got sent home and offices got closed and so forth. And we think about some of the processes and technologies, that have made significant advancements over the years. Certainly, there's been, great advancements made on the clinical side. Think about heart care, think about joint replacements, and so forth. Think also about technological advancements, diagnostics like electronic health records and so forth. But then when we think about the operational non-clinical side of things, a lot of that is really largely unchanged and remains incredibly labor intensive and paper centric and dependent upon multiple systems. So that advanced just a couple too far. Okay, sorry about that. So then, like I said, it's very, very paper intensive. So how do you maintain business continuity in a crisis situation when you too are dealing with short staffing? You've got people that are out on sick leave. You've got, many of you had to take drastic actions with furloughs and layoffs, and then, things that are going on, in population trends. So what are some of the things that, are going on in the industry that can help with some of these things? Certainly, it's trying to get a movement toward electronic processing and to try to automate some of that very manual paper-based processes, and then really try to move more to an exception-based workflow. Taking some of that supporting technology and creating that connectivity through the internet and cloud-based infrastructure so that you can facilitate those people that are working from anywhere. And if you're keeping up with the headlines, both here locally as well as nationally, I know Ascension just came out last week and said that, all the people that they've got that are working from home will continue to work from home forever. Another large health system that I work with, I think they have about 3,000 people working from home today. 1,500 of them will never, ever come back to the office. So you really have to think, how can I create a system where I can keep my processes flowing and yet still have people working all over the place? And you need that, of course, to be secure with a virtual private network so that you're not going to have any kind of violations in terms of breaches on security. And unfortunately, there's not a day goes by that, Becker's and other headlines in healthcare don't report about attempted breaches of security of hospitals and health organizations. So coders were one of the ones that had it figured out a little bit earlier, I think, than others. But when you think about your organization, think about some of these departments like accounts payable and all the manual processes that you've got with regard to creating invoices and dealing with the paper checks and reconciliation. And then think about your patient accounting department and your cash posting. Is that still, are you still getting paper checks and EOBs and all the remittances and correspondence? And then how are you handling reconciliation? Customer support is a little bit tricky. Some folks have definitely been quite cognizant of trying to have customer support people working from home, and definitely have concerns about, well, if they're working from home, are they going to hear the dog barking when that customer service representative is talking to that patient, or a child crying in the background? So all of that has definitely presented challenges. In terms of what has transpired with the CARES Act, we're going to get into PPP a little bit later, which is definitely a big portion of the CARES Act for businesses. But we had the COVID-19 emergency declaration blanket waiver for healthcare providers, and thank goodness that we did, because it opened up quite a bit of flexibility, particularly headed up by or spearheaded by CMS for Medicare. For telehealth services, and they relaxed some of their enforcement of the HIPAA and high-tech regulations regarding telehealth remote communications during this pandemic. Also, they relaxed some of the provider credentialing across state lines. And then the most important thing, right? You got to get paid for this. So there was allowance for reimbursement for telehealth services. And here too, you got to look at the silver lining, right, in something like this. And I think that this seems to be like one of the decent things that have come out of the pandemic. And I just read an article from CMS this morning that we're going to be seeing more of this. They're going to expand it to more lines in 2021. So here's just a couple examples across the country of organizations that really stepped up early on and created significant telehealth platforms. if you're bored some night and you want to Google Montefiore is in New Jersey. They were incredibly fast to market. They worked with a development partner, and within 2 weeks had 4 mobile apps for Apple and Android set up for both the provider side and the patient side to be able to take telehealth visits. And prior to that, they had absolutely no telehealth visits in their system. And in April, 80% of their visits were telehealth. And then, you know, within 3 months' time, they had 250,000 visits. So these things are possible. I realize that's a large health system. It's more challenging for a smaller, you know, healthcare provider, but it can be done. New York Presbyterian's another one, and they did it a little bit differently. They were using telehealth to monitor COVID patients and those who had been sent home from the emergency department to follow up on post-discharge instructions, and really also using their electronic ICU to monitor patients who were at smaller facilities. Again, here in this area, we're blessed with Mercy and what they can do in their virtual monitoring site that they have in Chesterfield. That's definitely one that if you've never had the opportunity to visit is something amazing to see. But again, they were able to see those patients, you know, that they couldn't have seen or who were hesitant to come in. And really, they also learned that in this model, they definitely had to plan on exponential growth in certain areas. Their supply chain, stockpiles, all those things were, you know, definitely very much put into focus, as was their physical space plan. You know, really being able to flex facilities. And we're going to see a lot of that here, like I said, as some of these organizations no longer need the square footage for medical office buildings and behind the scenes office space as they start vacating their leases. And then of course, staffing and training have been incredibly challenging. You all know that better than I about how challenging it is to recruit physicians and nurses, nurse practitioners, et cetera. From some of the financial implications of COVID-19, really when we think about what transpired across the board, whether it be a large health system, whether it be a standalone hospital, whether it be a physician's office, you know, those revenues were down significantly. 60% might be conservative, and we're starting to see Moody's, I know, has already downgraded certain large health systems. Yes, they got access to a lot of CARES Act funding, but of course, you know, as we continue through this pandemic, they're not out of the woods, and the rating agencies are really starting to recognize that. You know, the good news, volumes are coming back. Many are at about 90% of pre-COVID levels. Some of my clients that I've talked to, they feel like they're pretty much close to 100% of pre-COVID levels, which really is a testament to them and how they've made their patients feel okay to come in for procedures and services. And again, ambulatory and surgery volumes are close to pre-COVID levels, with emergency room volumes still continuing to lag. Though the concerning thing that you're hearing out of certain parts of the country, though, right, is that there are hospitals out there that are starting to shut down elective surgeries again. So, you know, there was, you know, the thought that we were in a V-shaped recovery, and now are we kind of approaching a W in terms of, you know, our peaking on COVID cases and what that could mean. From your standpoint, though, how does, you know, the impact of COVID really impact? Of course, you know, unemployment rate for 10 years had been falling drastically down to, you know, about 3%, 3.5% level pre-pandemic in February, and then spiked up to as high as 15% in April. And where does that hit you? It hits you in terms of your provider impacts and your payer mix, right? So there's very likely, and perhaps you're already seeing it, right? You've got your shift in your payer mix. There's a very good chance you're going to be seeing patients who had insurance before who are now uninsured, or who have moved to a different type of insurance and have a much higher self-pay percentage of your total accounts receivable. And that's really going to impact budgets, not just for the remainder of 2020, but into 2021 as well. You know, in healthcare settings, there's, you know, always been a key driver of, you know, surgery and emergency departments really being, you know, strong drivers of revenue. You know, the challenges of what happens, you know, if there's a second or even the third, depending upon how you count it, surge in COVID. And these health systems and physician groups just really can't afford to shut down for the next crisis. So it's, you know, incumbent upon all of us to try to do our part. Supply chain, boy, oh boy, that was really brought under a microscope throughout this pandemic in terms of the significant change that could potentially be needed for supply chain management with regard to national stockpiles, with regard to provider-based stockpiles, and then also really, and this goes for everybody, whether it's a large health system, standalone hospital, or physician practices, really looking at your physical space. What's needed for the operation? Can you plan for some more variable acuity rooms to try to help increase your capacity? And then, you know, that shifting remote workforce in certain areas. I know I've talked to providers who, you know, they think about the amount of space that they've got in their waiting rooms, for example. Well, and if you look at your waiting rooms now, what have you done? Many of them have shoved the people to no longer wait in the waiting rooms, but instead they're waiting in their cars, right? So do you really want to have all that square footage that had been in your waiting room kind of sitting unproductive? So I know I've talked to some who are, they're literally ready to bring in the construction crews and start dividing off their waiting room and creating more patient space. So that's sort of the first part of the presentation. And I guess I'll flip to Larissa and just see if there's any general questions in the chat box before we start talking about PPP and forgiveness.
I don't see any questions in the chat just yet, but I pretty much guess we might have more questions with this next section.
All right, very good.
Go ahead.
Well, if we can take just a little trip down memory lane, and maybe it's not a happy memory for many of us, right? But if we look back to March and April, when we were reeling from, you know, the rollout of the pandemic, the government came up with a plan. And the plan was for the Small Business Administration to try to help businesses. One of the keys here was that you had to have less than 500 employees to be able to participate in the PPP, which stands for the Paycheck Protection Program. Okay. And basically, at a very high level, if you think about it, what it was attempting to do was to keep businesses, to keep their employees on, not drastically cut headcount and not drastically cut wages. Okay, so that was the major gist of this. The SBA announced this. They, in the first round, had $349 billion set aside for this. If any of you that obtained these funds recall back to those days, it was a mad scramble. You know, our whole department at Commerce Bank is 5 people in the SBA area. Okay, that's how many we need on a normal year. Just like you guys, in a normal year, maybe you needed, you know, X amount of PPE. But in a pandemic year, you need that times 200, right? So what we had to quickly do was gather up a group of about 700 people in our organization, many of whom, including myself, hadn't done an SBA loan in 20 years. And suddenly we were all becoming experts on this process. So we ended up doing about 7,600 of these loans. We, by the counts of those clients that we did those for, helped save 154,000 jobs. So we were very pleased with that. And you know, of course, banks all across the country were the ones charged with obtaining the applications from the potential borrowers, reviewing them for completeness and authenticity, but then hurrying to the SBA to get the SBA's approval number, which was sort of the golden ticket that you had funds reserved, because of course, everyone was concerned this is going to run out of money fast, and it did. And then, as you recall, there was a second round. And like I said, the difference in the funding from round 1 to round 2 was only about $30 billion less, you know, it's 310 billion instead of 349 billion. So I do have to put this disclaimer here. My lawyers, you know, require it. I'm not the one giving professional advice. By all means, you need to go talk to your CPA. You need to go talk to your attorney. That was the case in the application. That will also be the case in the forgiveness, okay? And as you might imagine, we can't be counseling our clients, for example, on how to best apply. For example, which one of the 3 applications should they use? We can't really counsel them on that, because it could be construed that we're steering them toward perhaps the easiest applications, such that they could, you know, definitely get 100% forgiveness. So again, just reminder, it's you know, up to you to talk to your accountant and your lawyer. I will not spend much time on certain things that are very unique to how Commerce is going to do this. I know we have a few members of MGMA that we have worked with, so for them it might be really pertinent, but for others, needless to say, you need to talk to your own bank and find out how they're planning to do this. I'll talk, you know, through some of these things on the agenda here today, you know, what can be expected, communication. I can tell you for sure, we're not the only bank out there that has a portal, and we'll talk a bit about how that works. And then the forgiveness overview, documentation that's required, some of the best practices. And regardless of whether or not you're a client of ours, I'm going to give you some good customer resources that I think will really help everyone. Okay. In our world, what we're doing and what we've shared with our customers that they should expect is we're going to have an email process. We can't invite all 7,618 borrowers to our portal at the same exact time. Otherwise, we would risk that portal crashing. So we're waiving it, you know, about 500 at a time, and they get an invitation via email. And regardless of whether it's Commerce or whatever bank you're using, that bank has 60 days to review that application, okay? The good news, at least for our clients and hopefully many other banks, is we're going to have an e-signature this time. On the first go round, we had no e-signature. We had to get wet signatures, you know, pen and ink on paper to people who were all distributed, had to come back to us. So the e-signature process will be welcomed by all. After we review that forgiveness application, we have the automation built within our portal that the SBA would then receive that information. They then have 90 days with which to review. And again, I have yet to hear the exact number of aggregate SBA PPP loans, but again, it's hundreds of thousands, I'm sure. So they've got a big task on their hands too. They'll review it and they will decide whether or not you qualify. And if they agree that you have 100% forgiveness, they'll wire us the money, including the interest that's due up until payoff time. If not, of course, the final step would be that modification and repayment. So again, on our end, we're emailing clients. We're also backing it up with a hard paper copy of a letter, just letting them know that it's time to come into the portal. These are some of the suggestions, using Chrome and making sure you have all your documentation pulled together. Of course, you're going to need to decide which of the applications you're going to be able to use. You're going to have your documentation from your existing loan, which is you're going to need your account number, your loan number, and then of course making sure you have all your different files at your fingertips, each one in a separate compartment, so to speak. So if you need your second quarter 941 filings to back up your payroll, that's a PDF. If you need your third quarter, make sure you've got that ready. And then you're going to basically upload those into the portal as indicated. Obviously you create your own password unique for every client. On your forgiveness expenses, again, remember how this worked is at least 60% of your loan proceeds had to go to payroll costs, with no more than 40 going to things like mortgage interest, rent, utilities. And then there were certain things that it could not be used for. This program was not designed for high income people to have their salary protected. This was for protecting the rank and file, all the workers out there. So they made you cut back on your application request for anybody that made more than $100,000. They also didn't want to be providing these funds, even if they are legitimately one of your employees, but if they're domiciled and they reside outside the US, they were not eligible either. And then you couldn't kind of like double dip with qualified sick leave for those that had taken the sick leave. When the PPP first got started, and in that first wave, the understanding was you were going to have an 8-week, 56-day covered period, okay? But then on June 5th, Congress passed the Flexibility Act. And then after June 5th, all those loans that got closed, they had a 24-week covered period. So what they agreed to do was for those people that already had the loan taken out and had already received funding, they now had a choice. They could take either 8 weeks or 24 weeks as their covered period. And that, of course, began on the date that the loan funds were dispersed to the borrowers, but with the acknowledgement that, you might have a payroll cycle that doesn't exactly coincide with the day you got the funding. So, they give you a little bit of a alternative covered period in there. But regardless of whether you choose the 8 weeks or the 24 weeks, no one's covered period can extend beyond New Year's Eve of this year. As I mentioned, just like during the application process, where things kept changing, literally, as we were working through the applications, things were changing. They've done the same thing here. It started out, there was one application for forgiveness. Then there were 2. Now there are 3. So again, it's subject to change. You see our disclaimer down there. This was current as of a couple weeks ago. That does not mean that by the time you get around to applying for your forgiveness, that there might not be more applications. My suggestion to you is look at the 3 different applications. There are certain certifications and attestations that you must make in order to be able to use, for example, the EZ form or the S form if you borrowed less than $50,000. But again, you need to be able to make sure that you're going to be able to answer those properly. Otherwise, you're going to need to go into the 3508. Okay. This is just a little timeline. You're taking a look at when your loan got dispersed and then whether or not you are choosing 8 or 24. And I want to be clear, you can't choose 16 weeks. You can't choose 17 weeks. It is literally either 8 or 24 weeks. Okay. Then you've got your covered period, but that cannot run beyond New Year's Eve. And therefore you've got up to 10 months to apply for your forgiveness. Then the banks have 60 days to review. The SBA has 90 days to review. And there's a 30-day window built in if you decide you need to appeal the SBA's decision. So then when we think about documentation, okay, what are going to be some of those things that you're going to need to have available when you're going to apply for forgiveness? First of all, at the heart of this, and as the name implies, payroll protection program, right? Payroll is at the core of this. That has to be what the lion's share of your expenses were spent on. But those of you who applied early, got funded in round 1, have the option of either 8 or 24 weeks for your covered period. If you think about it, for many of you, that 24-week period will be sufficient that your payroll alone will be able to get you to 100% forgiveness, okay? And then you won't have to worry about your, electric bill for a couple months and your cable bill and your water bill and your sewer bill and so forth, and your health insurance and whatnot. Your payroll alone might quite probably suffice. So again, here's some of the documentation that would be required. The other thing I really want to stress to folks is the value of contacting your third-party payroll processor. Many of them, I mean, we've heard from clients who use Paylocity, Paychecks, ADP, that they've already been in communication and they have some good reporting built because again, what this whole program was trying to avoid was to avoid businesses cutting their staffing levels significantly and cutting the hourly rate of pay significantly or their compensation significantly. So your 941s are going to be your best friend, or some kind of state quarterly filings that you have to prove out how much you paid. And make sure that those are for the period of your covered period. If your payroll is not enough and you need to include things like your health insurance, your retirement plans, then you're going to need to make sure that you've got, some kind of payment proof, canceled checks, your bank account statements, something that you received from your health insurance provider, something you received from your 401k or 403b provider. And again, you've got to make sure it is absolutely crystal clear the period that that's for is for during your covered period. Another thing that was so incredibly frustrating for the clients and the bankers during the application process is, what is an FTE? How is an FTE defined? And this time they've got that a little bit more crystallized. And you can see here that, basically, if you were a business that was in business, back in 2019, they're looking for what were your FTEs back then, and comparing them to what they were now. They do have some exceptions in here for if you're a seasonal employer, for example, or if you're a new business. When you start getting into some of the non-payroll costs, you're looking at things like your business mortgage, interest only, not principal. They're not going to help you repay your banker, but they are going to help you keep your loan current with your interest payment. So again, some of the things that you're going to need to get access to, your amortization schedule, your canceled checks, and so forth. And again, you have to prove that you had that mortgage in place before February 15th. Otherwise, it's a no-go. If you took out a new loan after that, not going to work. Same things apply for your rent or lease payments, okay? You need to prove out, that you had a lease in place, that the lease was in place before February 15th, and then that you've made your payments and you've got proof of those payments, you've got your canceled check, you've got your bank account statement. So again, you can see where if you can get by with payroll alone, by all means go that way, because if you have to start getting into all this, it creates a lot of extra work on your part, the bank's part, and the SBA's part. And so that will slow down a process, needless to say, if we have to, tick and tie everything to compare to make sure that, you're only including expenses for the covered period. Utility expenses work the same way. You need to show, for every utility that you're trying to take, you basically have to prove out your invoices, prove out your payments, prove out your bank accounts, okay? Best practices, okay? We've already shared a few of those along the way. How do you streamline your application? Well, first of all, start by using the right form, okay? Is that the EZ? Is that the S? Or is it the traditional 3508? Your 8-week covered period versus your 24-week covered period. For many, that 24-week will get you full forgiveness, 100% forgiveness with just payroll alone. And that really reduces, the number of documents that you would have to upload. And by all means, checking with your payroll provider to see what they can provide for you for this purpose. You're not their only client that got a PPP loan and is now going through the payroll, protection program forgiveness. You might want to wait to apply until you have all your documents available. So for example, if your covered period is extending into Q4, well, you're probably not going to have your 941 until January. So you might want to hang loose. Remember, of course, the SBA will be paying your interest, that whopping 1% interest rate that you have on that note until you're through your forgiveness period. And that's another thing I'd like to mention is, for many of you who were knocking on my door early and early funders, you think you've got a payment due starting in November. At least on our end, we've notified all of our customers that they do not have to make that payment until they're working through the forgiveness and have moved through that process. So you got an email from Commerce. I can't speak to all the other banks, but from Commerce, you got an email saying, no, don't worry about that, okay? Be careful on your compensation limits. Don't forget that you've got to back out, whether you do the 8 or the 24 weeks, those people who got paid more than 100 grand. Again, don't make that mistake. Otherwise, you're going to slow down your process. Make sure you upload your documents to the correct spot. Again, I can't speak to how other banks' portals will be, but I envision they would be similar to ours in that, you're going to need to provide each and everything, and they're going to have them in a spot on that portal where they're going to want them submitted. So if you are using utility bills, don't put them in the spot that says payroll, okay? It's going to mess things up. And then a really, really important thing is keeping your supporting documentation for all of this for 6 years after the loan is forgiven or paid in full, okay? Some of the things you're not going to have to send to us, but you're going to need to retain for those 6 years. Okay, I promised you, regardless of whether or not you are a Commerce Bank client or not, there are some great resources that we're making available, obviously, to anybody who happens to come to our website. Our website is at the top, commercebank.com/PPP, okay? And what are you going to find there, okay? First of all, you're going to find the most up-to-date, frequently asked questions that are being answered by the SBA and the Treasury. This was going on during the application process, and it's going on now, where banks are having questions. We're asking all, and I mean that collectively, all banks are asking the SBA for clarification. The SBA is thinking about it, and then they decide, and then that answer goes on this FAQ. So we've got that link in there that it's always up to date, and it's ever changing. Today's is not going to look like 3 days ago, because the SBA is constantly opining on different questions that have been answered, or different questions that have been asked. In addition, we've created a documentation checklist, which will be very helpful for you as you're, when you finally get invited to that portal and you're really getting ready to put some serious time into gathering your things, you can go through this documentation checklist and say, yes, I've got this. Yes, I've got that. Yes, I've got this thing. And then be ready to upload all those things to that portal. We've also got all the applications, all 3 of the applications now, and the instructions for all 3 of those applications. I should mention also something that has come up very recently by the SBA, and I still even have not yet seen the documentation that's going to be involved for those clients who got over $2 million on their SBA PPP loan, but know that there's going to be an additional form that even if you've already submitted your forgiveness to your bank, there's another form that's going to be required. As you might recall, there was a lot of heat that was taken in the early days of funding of Congress people, the president, etc., thinking that certain organizations perhaps shouldn't have gotten PPP loans. So this form does exist. I've not yet seen it, but know it's out there, and be prepared if you got over $2 million. The other document that we have out on our site, again, available for anybody that would like to use it, PPPQRG as the extension on our website, will get you to our quick reference guide. So, if you're looking at the application and you're kind of remembering, ooh, what was this tip there? You'll find that in this QRG, quick reference guide. So feel free to use that. We also stood up a 800 number for our clients. Obviously didn't put that on here because that would only be pertinent to our clients. But by all means, the guidance is talk to your accountant, talk to your attorney, talk to your banker, okay? If and when you have questions on this. Again, just in terms of managing expectations, the main thing I want to say about this slide, while unique to commerce to a certain extent, it's not unique that it's going to take 60 days or up to 60 days for your bank to review your app. It's going to take the SBA 90 days to review your app. If you're sitting there doing the quick math, like many of my clients, you're coming to the very quick realization that this is not going to be done during 2020. It's going to spill into 2021. So if you've got docs, that are asking, when's this going to be done? It's not unreasonable to say it could be, 5 to 6 months, because that's, and then don't forget, there's also that 30-day appeal process that if, let's say, for example, you provide all your documentation and we think, yeah, it's good, we send it to the SBA, and the SBA comes back and says, no, we're only going to pay 87% of your loan, and then you want to appeal it, you've got that extra 30 days for appeal. So 6 months is not out of the question. The thing I do want to point out, that will be required if that is the case, your loan will have to be redocumented, and there'll be new documentation that will be required then, because basically then you're going to have a new note that's going to, have new repayment terms and so forth. That kind of gets to the end of my prepared, prepared remarks and prepared slide deck. Are there any questions? Don't guarantee to have all the answers, but would do my best to find answers for you.
Well, I don't see anything in the chat just yet, but we'll just give it a few minutes to see. I get the general impression that there's a lot of paperwork in the future for a lot of people.
Yeah, whether it's paperwork or files,
Yes.
I mean, we're trying to avoid the paperwork. There was a lot of paperwork on the front end because, again, nobody was expecting this. Nobody knew it was coming. Nobody had portals built. So yes, there was a lot of paper that was having to be couriered around to people's homes for signature, to the banks,
Oh my goodness.
for processing. But we're really hoping that the portal that was built, and by the way, there's what's called an API in between, the bank and the SBA, such that when the client uploads their 941 for second and third quarter payroll, that will automatically then, when we're ready, push that automatically without, a lot of human intervention and risk of error straight to the SBA so that they can do their same review process, just like the bank did.
That sounds like it's a little bit more streamlined than it used to be.
Mm-hmm.
So we did have a question from David. Any thoughts on what might happen to healthcare if there's not another stimulus package?
Obviously, everything that impacts the consumer impacts you, right? So if we've got consumers who are wrestling with, do I pay my rent this month, or do I pay my doctor bill? I'm afraid we know which one they'll probably choose, right? So for many that have not yet been called back to work, if you go back to the slides on the unemployment levels, if they're the ones who haven't gone back or who had a great job but got let go and have not yet found a job at the same level of compensation that they were before, it would not be pretty, right? That's my opinion.
Mm-hmm.
And of course, I think that's, also part of what everybody's waiting until the election's over and then they're going to work on it. But for a lot of these people, they've been holding on for a long time.
Well, and then another complicating factor for a lot of people is that open enrollment for different health insurances just started a few days ago. So people are trying to forecast. Well, I know some people are trying to forecast for next year, like what premium versus deductible they're opting in for, and say, okay, so am I going to go to the doctor if I don't necessarily need to, and planning their care out and their plans. For people that don't have chronic conditions, I know that if you can get by a little bit more, sometimes you might do that. So that does go into the bottom line of our practices with how often people are going to come in, because there's a lot of practices that it's not that urgent care. So there's lots of complicating factors right now.
Right. Well, and when you think of, the consumer directed health plans and high deductible plans that so many are on right now, when you start getting into this time of year, I'm a living example of that. My shoulder's bothering me. Okay. But you know what? It's November and I haven't met my deductible. I'm not going to the doctor. I'll wait till January 1st, right? When I'm in a new year. Because if they send me for an MRI or whatever, then it'll at least be in a year when maybe I'll meet my deductible, but I'm not going in November.
Yeah, it's kind of like that gamble, like health and financial everything.
Right. I was on an HFMA seminar last week for the Region 8, and they said the current numbers on high deductible health plans is now 1 in 3. So again, I suspect you all are seeing this in your practices where, they've got some pretty high deductibles, and depends how much they've built up in any HSA plans, because of course everyone is lured to those high deductible health plans by the lower premiums that their families are charged, but are they really taking that difference and socking it away in their HSAs so that they've got the money to pay you when you send them that bill?
I think that could be a whole webinar just in itself.
Yeah.
So David, did that kind of answer your question? Does anyone have anything else that they would like to ask Tammy? Well, I'll give it, oh, yes. So David says, yes, thank you. So I'm going to talk about the upcoming events, and if anyone has any last minute questions, they can definitely put that in there. So we have webinars for a long time coming. We're, just as a general announcement, we're going to be doing strictly virtual events for the first half of 2021. It just is what we're doing. Webinars are adding value, but we don't want to do the risk of meeting in person. So the next one coming up is on Wednesday, December 9th from noon to 1 p.m. And the topic is Finders Keepers, How to Plan and Execute Retention-Focused Recruitment. And that's presented by Deborah Wiggs, founder of V2V Management Solutions. So definitely looking forward to that. And I want to thank you very much for your time and all the information today, Tammy. It was very valuable, giving people an idea of what's coming up next. And again, we do have problems with the website right now. So if you have any issues or problems, definitely email Kara at administrator@mgmastl.org, and she will get everything taken care of for you. So we don't have any other questions. So I think I'm going to close it out for today. But thank you everyone for joining us. Thank you, Tammy. And I hope you have a good rest of your day.
Thanks. Appreciate it.